Welcome to my August 2023 update on the best accounts for your savings. Where are you going to get the highest rate? And there is some big news to share with you this month. A 5% easy access account and an increase to premium bonds, plus some decent rates in fixed rate bonds and fixed rate ISAs. So lots to get through. Now, I will, as always when I do these updates, just caveat this, that the rates change all the time. I'm recording this on Tuesday evening. It's going out on the 8th of August. You may be watching it in a day, 2 days, a week, 3 weeks, whatever it might be later on. And rates will have changed. But you don't have to worry, because over at becleverwithyourcash.com/savings, there are daily updated best buy tables by me and the team. Every time there is a movement, we're over there updating those lists. So this video is more going to give you an idea at this point in time what you can get, what's changed since last month, my view on some of those different accounts. And of course, now if you want to kind of just wait until next month, you can do that as well. I'll do another update at the beginning of September. But in between, do check that out to see what's going up and what's going down. Now, let's start off today very quickly talking about what's happened in the bigger picture, what might be informing some of these changes in interest rates. I won't go into a huge amount of detail because I did a video just last week about the Bank of England's latest base rate increase from 5% to 5.25%. And that 0.25 base point increase has been reflected in some of the accounts that I'm going to talk about today. Some, not all, of the changes are down to that. Because there's something else which I also talk about in that other video called the consumer duty. This is from the FCA, the Financial Conduct Authority. These are new rules where they are putting pressure on the banks to pass on more of those base rate increases to us. And as I say in that other video, so please do watch that one. It gives you much more context. But they've got until the end of August, the banks, to justify their current savings rates. And it may well be that when they're looking at this, when they're trying to justify this, they go, we can't really do that. And we'll push up rates a little bit throughout this month. So I do expect to see more changes coming over the next few weeks. And obviously, I'll give you an update in a month's time, or if anything really major happens, I'll do an extra video, or you can just find it over in the blog. And we will come back actually to one of the sections. We'll come back to those consumer duty rules, because I think that's had an impact on some of the bigger banks already. In a second, we'll talk about the latest rates, but I want to quickly share this table with you. Again, all the information at Be Clever Your Cash, if you want to look at this in more detail, I'll just glance through it, but just give you an idea of how rates have moved since last month. As you can see here, on the 8th of August, the best easy access 5% is a 0.65% increase, so a massive increase there. And limited access, 9-day notice, closer to that increase, what the base rate is at 0.25 percentage points. As we scroll down, you can see that the fixes have seen much smaller increases there. 0.01% in some cases, up to 0.45% on a shorter fix. Again, showing you that movement isn't so much on fixes. Whereas in ISAs, some big changes there. I will come back to all of these in the video. So that's what's been going on there. And that obviously is impacting some of these rates. And one of the big areas, and we're starting this right now, one of the big areas where this has already kind of come through is on premium bonds. Now, we've already had a number of increases. Last month, I told you about 2 increases in the previous couple of months. It was yet another one. So the prize draw rate for the start of August, the draw that just happened last week, was 4%. I mean, you had a 4% prize rate, not 4% interest, 4% prize rate. Well, from the September draw, the one that happened on the 2nd or 3rd of September, it's going to be 4.65%. That is a massive increase for NS&I, National Savings and Investments. And in fact, this is the highest rate for premium bonds since 1999. So 24 years, more than 24 years, where since we last had a premium bonds rate this high. Now, what does that actually mean for what you can win? Well, let's have a look. I've written up a full analysis over on becleverwithyourcash.com. So do go over if you want to read that and do more. I'm not going to do a separate video on premium bonds because they're the same thing every month, more or less. But here you go. You can see what's happening here in terms of the individual prizes, what you can win, and how much you can win. Now, as you can see, there's still only 2 £1 million prizes right at the top here. £1 million, only 2 of those. But as you go down, you can see you've got August on the left, so the last draw, and then on the right, September, the one that's happening. You can see there are slightly more of those higher prizes. So a handful more at 100,000, a handful more at 50,000. But as you go down this table, this column right on the edge on the right-hand side, you will see that there are a lot more prizes at £100 and £50. Huge amount more, about 450, 460,000 more prizes at those levels. So if you do win a prize, you've got a much better chance of winning a £50 prize or a £100 prize. And one of the victims of that, of all those increases, are those £25 prizes. Only a million of them, say only a million, but there were 1.7 at the draw in August, and there were many, many more before that. So really what NS&I are doing, they're continuing to do, is whack up the total prize funds. You can see there's more money there. It's going up from £404 million to £470 million, so an extra £66 million in total in prize funds, and more prizes going from 5.5 to 5.785 million prizes, so loads more, but they're doing it at that higher level prizes. Now, of course, as I always say, with premium bonds, there is absolutely no guarantee you will win anything at all, despite this 4.65% rate sounding pretty good. And as we talk about some of the other rates available in easy access now, you think, yeah, maybe that isn't too bad. You've got to remember that you may not win anything at all. And if you do win, there's a good chance you won't win near that rate at all. The prize rate is not a guarantee. You've got to remember as well that although there are, it's not just the £25 prizes, there's £100, £100,000, £1 million prizes. It really, really reduces your chance of winning for every bond that you have. And although the chance of winning have increased for this draw for September from 22,000 to 1 to 21,000 to 1, so you've got a better chance. It's not a massive change. If you are tempted by this, one thing I would say is don't buy your bonds until the end of this month, until the end of August, because your bonds have to be in the NS&I Premium Bonds account for a whole calendar month before they can be entered into a draw. So if you put them in now on the 8th of August, they're just going to sit there for this month. They're not going to be anything at all until the beginning of October. So you may as well wait until the end of August to put them in for that October draw. Like if you have put money in before the start of August, then they will be for that September prize draw. Get loads more information about premium bonds in other videos that I've produced here on the channel and over at becleveryourcash.com. So that's premium bonds. Now let's talk about what the biggest savings increases we've seen this week. And this is on the easy access accounts. And this is from Tandem. Tandem is an app-based bank. You can only open up your savings account if you have got the app. You can only manage it via the app. So that might put off some of you who don't like online banking at all, let alone mobile banking. Maybe there's a chance your older phone might not be okay for the app. But broadly speaking, most of you should be able to get this. They have increased their easy access account from 4.35% to 5%. 5% easy access. And that is a huge increase. That's not the base rate being passed on. That's not 0.25 percentage points being added on to the previous rate. That is a massive 0.65 added on. And this is a bank that was already not at the top, but near the top. Tandem at 4.35 was doing all right. We've seen other movement more recently, and I'll come back to those in a moment, but they were doing all right. So there isn't a bank worried about consumer duty rules, pressure, and they've got to justify it. This is a bank, in my opinion, who are going, right, we want to be at that top. We want to get a load of money in. We want to kind of gain a new customer base. And we're going to do that by putting a fair amount of our marketing spend in there to be right at the top and significantly at the top. This is similar to what we've seen in the past from Virgin Money and from Chase and from Chip as well. So it's such a big increase. This is them making a statement. Now, a few things to talk about that account I'll come back to in a minute, but let's just talk about what might happen below this. Does this mean that we're going to see other banks suddenly jump up easy access to 5% now? There's a chance. You know, talking about Chip, they have made it very clear they want to be right near the top of the table as a kind of a customer acquisition tactic. Similarly, Crew, they might not have always been at the top, but generally a base rate's come along, they go, right, we're going to increase things and we'll go up a bit and just be there or thereabouts and try and not only bring in new customers, but retain that money in there by offering competitive rates. They have been doing that obviously also out of their marketing spend. Kind of, I would imagine a part of it is that it's sort of not just about passing on what they get elsewhere. It's a big part about customer acquisition and them for a long term. So they might want to sort of compete with this, but it is a really big jump. And we haven't seen any response from them yet from last week's base rate increase or to yesterday, at the time of recording this, yesterday's movement from Tandem. Know my luck, this video go out on Tuesday and they'll do something on Wednesday and push that up. But don't worry, if they do, becleveryourcash.com/savings is the place to find out. But yeah, I think we're going to see some movement towards 5%, but I think it is quite an ask to come up to that 5%. I'd love to be proven wrong, but I do think that maybe Tandem are going to be there for a while at the top. But as we look in a moment, there are a number just below that, and we'll talk about that in a second. But first of all, I do want to talk about Tandem in a little bit more detail because this 5% rate does sound fantastic and it is really good. But there is one little catch that you have to be aware of. This 5% includes a 0.35% bonus for 12 months. So if you're opening up a Tandem account now, you activate it, you go in, you'll have to press a little button in the app, which is very easy to do, takes you seconds to do it, to top up the rate from 4.65% to 5%. So you'll get that no problem. Where it becomes maybe more of an issue is if you open this account previously and you've had that bonus running for a while. So I actually triggered this bonus in February of this year. So I'm already 6 months into my 12 months of that bonus. When I come around to next February, will there be another bonus or will it just end? It's really hard to say, but it's certainly a clever way of getting to the top of the tables or get business in, knowing that they might not have to do it continuously. That rate might disappear without them necessarily cutting the rate. The bonus just ends. And I know some of you may would have opened it in last autumn, so you haven't got months time left at that kind of with that bonus. So really the rate you'll be getting will be much, much lower, close to that 4.65%. Now, of course, it's not really anything massive to worry about because you can move your money when that bonus finishes, or even if another rate comes in from another bank, which is higher, at some point you can always move your money across. But I would suggest that you make a note in your diary for when that 12 months is up, because if they have remained at the top for the entire year, which you never know might be possible, or near the top, you don't want to get caught out and forget later on and lose that quite chunky 0.35% bonus. But I said there were others not too far behind. So let's have a look at those. Again, this is over in my summary article on becleveryourcash.com. Similar information is over on that /savings guide. But you can see here, Tandem at the top. Just below that, we've got Monument Bank and Secure Trust Bank at 4.65%, which is, again, very decent, very good. Shawbrook, 4.63%, just below that. And a few there at 4.6% as well. So I would say the number of banks we've got at 4.6 and above, that really that's my kind of close to my threshold. I'd maybe, if you've got a bank that normally moves and hasn't yet, such as Chip still at 4.51%, Crew at 4.3, so I can't remember what Crew's on now. I'll have to come back to it in a second. I've got it on another slide. But again, if you're on those ones and they haven't increased since last week's base rate, then maybe stick around for a bit, see where they go. They might come up to 4.6, 4.7, 4.8, maybe higher. I don't know. But I'd certainly be thinking anything too significantly below that, and they haven't moved for a while, then have a think about moving it up to one of these, if not to Tandem. And that makes sense, broadly speaking, I would say, to go up to Tandem rather than the others. Now, in terms of the limited access accounts, there's not really been a huge amount of movement there. This is kind of, normally they're a bit higher than the easy access. And obviously right now they're not. None of them are above 4.6%. Again, that could change in the coming weeks, but at the moment, none of them are. However, I do want to talk about this account here from Halifax, because this comes back to when I talked about the consumer duty rules and this pressure from the FCA. Some of the bigger banks have responded by introducing some relatively decent paying rates. Halifax, for example, good here, 4.2% on the Halifax Reward Bonus Saver. Again, you can beat it. But if you want to keep things simple, if you want to keep things with a bigger bank because you've already got an account with them, or you don't want to faff around with too many different options, you might want to stick with that. 4.2 is pretty decent. You do have to have a reward account, and this is a limited access or restricted account. So if you take more than 4 withdrawals from this account in a year, it drops down to 1.05%. So this is really account money you don't really want to touch that often. I told you last month about a similar account from First Direct and similar from HSBC. They're around 4% on those. There's also a newer one from Lloyds here. Same one as that Halifax one, just a slightly lower rate. You have to have a Club Lloyds current account to get this. Again, they are not bad options if you want to keep it easy, but you will be missing out on rates. Incidentally, that Halifax and Lloyds accounts, they have equivalent rates, exact same rates, same terms, but as an ISA. Again, that's something we'll come back to later on, but that might be a good option for you. While we're talking about those accounts, which if you want to keep things simple, let's quickly also touch about some of the current account options out there. This is the ones where the money is in a current account. You will be getting a lower rate, but again, it makes things a little bit easier. And I focused here on the ones which don't have any kind of restrictions at all. Crew, currently 4.35%. Haven't seen them increase anything yet following the base rate, so that one may well go up. Chase have already announced that they increased following the base rate from 3.8 to 4.1. Monzo already increased from 3.7 to 4%. So they aren't going to move anytime soon. But again, keeping things relatively simple, all within an app. And you might have noticed, it's worth talking about, you might have noticed that normally I talk about the Barclays Blue Rewards Rainy Day Saver when I talk about both easy access and also current account linked savings accounts. And I haven't mentioned it until now. Now, technically, that is still the best paying easy access account, 5.12%. but it's a right faff to get it. And Barclays, although you can say the same about most of the big banks, not the most ethical. So I think, is it worth jumping through all those hoops to get 5.12% on up to 5k when you can get 5% above 5k with Tandem? I think probably not. Maybe stick around for a while. Similarly, there are 4% with Santander's Edge. There's 5% with the Nationwide Flex Direct. They all have been in the past miles above everything else, but the gap is much, much smaller. So either they're going to stay as they are and you should vote with your feet and disappear, or they might react and they might suddenly push things a bit higher. If they do, obviously, I will let you know exactly what is going on and whether it is worth making any of those changes. Before we move on to the other accounts, quickly share some notice accounts. Now, notice accounts do pay more than easy access. So if you can lock your money away for a certain amount of time and you know that you need to do this, they might be worth a look. Here are the top paying ones: 90 days BLME with 5.35%, 120 days Dudley Building Society 5.45%, 190 days Buckinghamshire Building Society 5.3%. There is another one which I've not listed here but is worth looking at, which is a base rate tracker one from Secure Trust Bank. So that one will be paying 5.25% right now. If base rate does go up to 5.5 and 5.75%, it means you're going to get that increase. And it is certainly worth considering, but it is a 6-month notice period. So you have to sort of know if you want your money for something in 6 months, you've got to put your notice in before that happens. Otherwise, it is locked in. You can't access it. So for example, I actually open up one of those for my tax I've got to pay in January. I hope it's too late now if you want to do it because you've got less than 6 months. But I opened that up last month, put the money in, then gave my notice immediately. So I'll get all my money that I've put aside for my tax bill be paid in January, getting hopefully a very, very decent rate. The base rate, hard to beat that. Not impossible, but hard to beat it. That money all pops through in January. Not much to talk about when it comes to regular savers, but I'll give you a quick update here. Last month, I told you about a 9.5% paying account from Saffron Building Society. Regular saver at 9.5%. Wow, amazing. Except it wasn't that amazing, was it? Because very few people could get it and you can only put 50 quid in. Well, that's now gone. So none of you could really get it. So it's not really bad news. But I'm letting you know anyway, that has disappeared. Top regular saver is still 7.5%. But again, not many of you are going to get that because you need to be a member of that building society. But very little change below that. 7% with First Direct, 6.25% for Club Lloyds, 6.17% with NatWest or RBS. They all require you to have a current account, First Direct, Club Lloyds and NatWest. If you just want to open up a decent regular saver, Beehive Money, 6%, 250 a month, isn't bad at all. Now below this, one thing to bear in mind with regular savers is those easy access get better at 5%. If they go more than that, that gap between them and regular savers doesn't become so good. So you need to be more aware of some of those restrictions that come with regular savers. Although do check you don't have to put a minimum out every single month. If you do, at least make sure you're doing that rather than ditching them completely. Again, we might see some improvement and I'll let you know if we do. Now let's talk about fixed rate savings bonds. There have been improvements here. Not necessarily massive improvements, but improvements across the board. Better at 6 and 9 months. You can see there 5.55% Secure Trust Bank on 6 months, 5.64% on Hampshire Trust Bank at 9 months fixed rates. Better than you can get last time. 12 months, 18 months, 2 years, 3 years, 4 years, 5 years. Improvements, but not substantially. And in fact, some of the providers who were top of the table or are in and around these top rates have either reduced their rates or withdrawn what they're offering. So this, again, as I said last month, looks like potentially we might have peaked around fixes. No guarantee. I've said that before earlier in the year when they were around 4%. Maybe we've peaked. Now we're peaking around 6%. But with those base rate predictions now looking at 5.75% and banks pricing in increases already in the future to these fixes, it may well be they start to drop down or maybe even stay roughly where they are. But if you have got money you can lock away, it's certainly worth having a look at some of these options here. The top one there, 6.1% from Recognised Bank for 2 years. That one came out today. Otherwise, banks have been starting to sort of disappear slightly in this world. Atom, for example, reduced from 6.05 to 6% on their 1 year fix. Still there, still high up, but they've reduced it ever so slightly. And also, slightly scrolls down slightly, you've got 4 and 5 year ones there again. They are below 6%, but still pretty decent. Look a long way in the future. You know, if you could say you could get this kind of money so far in advance, you'd be very, very happy. As I always say that we're talking about fixes over 1 year, be really, really careful to check when you can access the interest, because that is when it's going to count towards your tax bill. And if you go over your personal savings allowance, £1,000 for a basic rate taxpayer, £500 for a high rate taxpayer. You'll be paying 20 or 40% on anything above that allowance. And remember, 1 year, 2 years, 3 years, 4 years, 5 years, the interest all compounding year on year on year. There's a good chance that that could be quite a lot. So you need to make sure that if that is going to be the case, you're not better off with a fixed rate ISA. Now, ISAs have moved on a lot. They moved on a lot last time. They've moved on a lot again. And this is where, if you look at that 2-year fix there, 5.9% from NatWest, this is where, again, the FCA pressure on the banks under Consumer Duty to increase their rates. I think this is where NatWest have gone, look, here's a decent rate. We're offering 5.9% on a 2-year fix. They also had and still do have 5.7% on a 1-year fixed ISA. That has been beaten by Paragon. What I should say about this NatWest account, also from RBS, is that is closing very, very soon. They've got a limited amount of time before you can open it. So if you are interested in one, grab it while you can. Easy Access has also improved 4.4% from Synergy, which isn't too far behind some of those second run Easy Access. Obviously, it's a big jump down from that Tandem at 5%, but not too far off those others. No movement on lifetime ISAs at 4%. So again, lots of things to go through there in that roundup. Remember, head to becleverwithyourcash.com/savings, not just for any updates, but also the links for all those accounts we've spoken about so far. So you can click through and read all the information and the details about them to make sure they are right for you, whether that's down to the minimum deposits, how you access the money, when the interest is paid, all of that kind of stuff. My name is Andy Webb. Thank you so much for watching. Make sure you check out these videos here for more ways to boost your savings.